Friday, 13th through 14th price review. So getting started here, we're looking at the NASDAQ on the 4-hour time frame and the S&P on the 4-hour time frame. As you guys can see, outlined since Monday night, we had this 4-hour fair value gap that we wanted to see act as an inversion fair value gap, so price could trade within there, and then that would propel us higher, taking out the buy side liquidity, and that is pretty much what we got. Now there was a little bit of time distortion in here and delay before the real move higher, which can occur sometimes, especially in low probability conditions, because as you guys saw on the daily time frame, price has just been very stagnant. But I believe that conditions should be getting a little bit more clear. Now looking a little bit more deeper into this fair value gap, you can see the low end of it right here on the S&P. The body on CPI had closed below the low of the fair value gap. So this is the low of the fair value gap right here. On the S&P, that CPI 4-hour candle closed below, while on the NASDAQ, at that same fair value gap low, that close of the candle did not close below the low of the fair value gap. So this is a crack in correlation between the same PD arrays on two different assets within a triad. And this is one of those little tricks that you can use to gauge strength and weakness in assets, because as you guys know, NQ, we've been wanting to see that be the stronger asset for the upside, and that's what we got. You see the NASDAQ propelled a lot higher than the S&P did. And this is one of those little tricks that you can use to kind of validify that. And now we're looking at the 1-hour time frame, and this is Wednesday and Thursday's price action right here. So as I stated in the live stream, which the audio for some reason did not record, so I'll be saying it again here because it's a very, very useful trick. As you can see, there was a sequential S&T formed between Wednesday and Thursday, but price had no respect for it whatsoever. And if you would have been in the Wednesday live stream, I told you guys, if this happens, don't get fooled down here and don't expect to short the market down here. The reason for that is because the sequential S&T was formed inside of the Asia session. So this is Q1 of the daily cycle right here, and that's whenever the S&T got formed. So I believe this candle right here was the very high of Wednesday, while over here on the S&P, this was the very high of Wednesday. So the NASDAQ had already ran out that high, while the S&P had failed to. And it's specific in the Asia session. Whenever this forms in Asia session, whenever you have a weekly cycle sequential S&T form in Asia session, typically you can see London session follow through, as you can see right here. But the New York session can make an unprompted reversal. So what do I mean by unprompted? I mean, it can kind of just reverse without any real reason if you're looking at the immediate triad. So down here, there was no sequential S&T on the daily cycle, price just reversed. And now we're looking at the 15-minute time frame. We have the NASDAQ, the S&P, and we're bringing on GBP USD, which is a part of the Forex triad. So when am I allowed to use or look for intermarket sequential S&T? Everybody, welcome to the core concept. Whenever the triad you're focusing on introducing doesn't show anything levels immediately, that is when you're allowed to use what is a reversion intermarket analysis. A reversion level is simply a level within a TPD that the market will refer back to. You only really want to focus on it whenever there's absolutely nothing showing in the current triad that you're trading. And you'll be able to anticipate things like knowing when the triad you're trading isn't going to offer something immediately, because Wednesday night I stated and pointed out to you guys that, hey, if this forms, then we could see a reversal to the upside without any real conviction. And that's one of those things that you'll just get through experience, and you just have to see it happen as it forms. But as you can see, GBP USD, which is the pound dollar, took the low of London session, while the S&P and the NASDAQ, and if you go look at the Dow as well, did not take that low, creating a daily cycle bullish sequential S&T. And it is important to keep in mind that on all three of these assets, that sequential S&T formed, well, that intermarket sequential S&T formed on a new week opening gap. So it adds probability to it. And even when you do get intermarket sequential S&T, just to confirm it, you can use the universal model, which tipped its hand. As you can see, we have a breaker right here, and then we have a fair value gap, so a breaker and a fair value gap overlapping each other, which is high probability. Price trades back down into that and then goes for our targets that we had been aiming for. Now, why is this a valid breaker? Whenever you have sequential SMT, the asset that creates a failure swing, for example right here, the S&P and the NASDAQ did not take out this low right here, but the pound did. Since there is a sequential SMT, this is still classified as a breaker. So the S&P and the NASDAQ, even though they created the failure swings, they'll still treat this as a breaker as if it took a low making a lower low and then a higher high. Since all of these markets are supposed to move in tandem with one another and follow each other, even though this one made a failure swing, or these two made a failure swing, and this one made a lower low, price is still going to follow the rules as if it did make a lower low under this low. And it's also important to keep in mind that this fair value gap formed right at 8:30, which was a byproduct of the news embargo that released. So the actual time that the fair value gap released makes it higher probability. Usually fair value gaps on the 15-minute time frame and below are higher probability 8:30 and afterward. And now looking at just the NASDAQ and the S&P, if we take off the lipstick, you guys can see that there was a TPD inside of that gap, which is useful for continuations. So the reason why this TPD didn't cause price to reverse is because our narrative was bullish. And this is why narrative is extremely, extremely important to understand, and why we've been on this for so long about narrative. And we're just now getting into actual entry models, which are the reversion levels, which I'll share with you guys tomorrow. But if you're not able to get on board with that universal model of the fair value gap and the breaker, if a TPD forms inside of that, then on candle 3, this would be candle 3 right here, you can typically find a reason to get on board with the move if a TPD forms inside of that gap and breaker. So now we're back to the 1 hour time frame with the NASDAQ, the S&P, and the Dow. And we're looking at Friday's price action. So as you guys can see in the London session, we dropped below market price and we formed a TPD on the hourly time frame. Now we're going to zoom in on this portion of price action right here where that TPD actually formed. Going from a 1 hour time frame to a 15-minute time frame, this gray shaded area is that TPD, just viewing it from a lower time frame. And as you guys can see within that TPD, we formed a reversion level that price referred back to and then continued higher. Now, why was NASDAQ the one that took out London's high and the S&P and the Dow did not take out London's high? Because as you guys know, our focus for which asset would be the strongest has been the NASDAQ. And it all started at the beginning of this week whenever price tipped its hand, with the previous week's range being the advanced premium and discount sequence. Now price was low probability because there was an unexpected news event. Trump had been speaking all day, and that's one of those things that can just pop up out of the blue. So it's very important that you manage your risk, as well as the previous day had formed a large range. So whenever you have a large range day on the previous day, usually that next day is a little bit trickier to navigate, and that's what you guys saw today, as well as that random Trump news that lasted all day. But looking a little bit further into this reversion level, as you guys can see, I don't have the time of the opening of the 7 o'clock candle or the 8 o'clock candle, because this TPD right here, the hourly TPD, was the 6 o'clock candle, but I don't have the opening of the 7 o'clock, 8 o'clock, or even 9 o'clock candle showing. And that's because once you have a TPD that you know is high probability, and how do you get a high probability TPD? From understanding the narrative. With a reversion level inside of that, all the candles following will use that to take off price and continue the motion of what it's already doing. So as you can see right here, the S&P, we traded higher, traded back within that reversion level, traded up once more, traded back into it one more time, and then rally higher. As you can see on the NASDAQ, we kind of just stayed stagnant within there and then rallied higher. Now looking at just the NASDAQ itself, as you can see, after we propelled off of that reversion level, we formed a 15-minute fair value gap from a 15-minute reversion level, and the time this fair value gap was made was once again at 8:30. So if a fair value gap forms after a reversion level, typically that gap can be used to stay in tune with the order flow. So price drops in the fair value gap once, drops in it once more, and then it rallies higher. So hopefully you guys found this one insightful. For the live stream, since Monday is a bank holiday, we will have the live stream Monday night. Enjoy your weekend.